Everyone keeps talking about the housing crisis. But what if I told you there's an entire suburb in Canada where people allegedly invented fake jobs, fake pay stubs, fake companies, everything just to buy million-dollar houses, and the banks let it happen? It got so out of control they literally named the scheme after the city itself. Before we dive into the absolute madness that became the Brampton Loan, let me set the scene. It's 2015. You're scrolling through real estate listings in the Greater Toronto area. Homes that sold for around $400,000 just 5 years earlier are now pushing past $1 million. You're probably thinking wages must have exploded, that everyone must be making serious money now. That assumption would be completely wrong. What actually happened was far more interesting, and far more illegal. Brampton is a city just outside Toronto. Family-oriented, immigrant-heavy, full of people working hard to build new lives. And its housing market completely lost its mind. Between 2010 and 2017, average home prices didn't slowly rise. They doubled. Literally doubled. But during that same period, household incomes barely moved. So the obvious question becomes, how were people affording these homes? The answer is simple. They weren't. Not legitimately. They were using something insiders started calling the Brampton Loan. It wasn't a real mortgage. We're talking about people earning $40,000 a year being approved for $800,000 mortgages. And that's not an exaggeration. This happened thousands of times. Here's how it worked. You want to buy a house, but your income doesn't qualify. No problem. You visit a mortgage broker who's in on the scheme. They create fake employment letters, fake pay stubs, fake tax documents. Sometimes they even created fake companies just so if the bank called to verify employment, someone would answer. And the craziest part is that many lenders quietly looked the other way because they were making massive amounts of money off these mortgages. The entire scheme depended on a few key players. First were the mortgage brokers, the people who are supposed to help borrowers find loans that actually match their financial reality. Instead, some of them became full-blown document forgers. They'd fabricate letters saying you earned 6 figures when you were barely scraping by. They'd invent business records showing you owned a thriving company when you maybe drove Uber on weekends. Then came the appraisers. Their job is to determine what a house is really worth, because banks aren't supposed to lend more than that value. And finally, there were the buyers themselves. This is where the story gets complicated. Not everyone involved knew they were committing fraud. Some people went to brokers recommended by family or friends. The broker would say, "Don't worry about your income. I'll handle it." And the buyer assumed this person was just really good at their job. Others absolutely knew what was happening and didn't care. They wanted the house. So why Brampton specifically? Brampton has a large South Asian population, but this story isn't about race. No group is inherently more prone to fraud. That idea is nonsense. What really mattered was the structure of the community. Your uncle knows him. Your cousin used him. Your neighbor bought a house through him. There's another layer to this. Many immigrants came to Canada with strong professional backgrounds, engineers, skilled workers, but their credentials weren't recognized. Someone who was an engineer back home is now driving a truck, earning a fraction of what they once did. They want the Canadian dream. But the bank looks at their current income and says no. So when a broker says, "I can help," it's incredibly tempting. They don't see it as fraud. They see it as correcting an unfair system. The consequences were massive. When thousands of people receive mortgages they can't actually afford, home prices explode. Regular families get priced out, not because they're irresponsible, but because they're bidding against fraudulent pre-approvals for far more money. Eventually, even honest buyers feel pressure to fudge their own applications just to compete. And then there are the banks. You'd think banks would stop this. They have fraud departments, underwriters, verification systems. Technically, all of that existed. But during the 2010s, mortgage lending was insanely profitable. Interest rates were low. Housing prices were climbing. Banks were competing with each other to approve loans as fast as possible. Speed mattered more than scrutiny. On top of that, many mortgages were sold off and packaged into securities. So if someone defaulted years later, it often wasn't the original lender's problem. If this sounds familiar, it should. It's basically the same dynamic that caused the 2008 financial crisis, just concentrated in a Toronto suburb. Then there were stated income mortgages. These were supposed to help self-employed people with irregular income. Instead, brokers told clients to claim self-employment and invent whatever income number was needed to get approved. The scale of this was staggering. One investigation found a single broker had submitted over 100 fraudulent applications. Fake companies were reused dozens of times, and the loans still got approved. For years, nothing happened. Everyone made money, so everyone looked the other way. But eventually, defaults started rising. By 2017 and 2018, Brampton's mortgage delinquency rates were noticeably higher than the national average. Regulators noticed. The media followed. CBC investigations and national headlines exposed the scheme. The secret was out. Some brokers were arrested. A few went to prison. Most faced no real consequences. Mortgage fraud is extremely hard to prosecute. Everyone has plausible deniability. Buyers blame brokers.
Broker blâme client.
Appraisers claim professional judgment. Banks claim they relied on provided information. And few people want to come forward and risk losing their home. The damage was already done. The scandal exposed massive cracks in Canada's mortgage system. Safeguards failed. Incentives were broken. Rules tightened, but many fraudulent mortgages still exist today. As long as payments are being made, no one wants to reopen those files. Here's the dark irony. Many people who committed fraud actually built wealth as prices kept rising. Meanwhile, the people who played by the rules were left behind. That's why this story makes people so angry. On a broader level, fraud distorted demand, misled developers, redirected money away from productive parts of the economy, widened inequality, and destroyed trust in financial institutions. Over time, the Brampton Loan even became normalized. People joked about it. That's how systemic fraud survives. It stops feeling wrong. The incentives never really changed. Brokers were paid based on volume. Banks were protected by mortgage insurance. Risk was pushed onto taxpayers. Everyone got paid except the public. Today, Brampton still carries a stigma most residents don't deserve. Prices remain high. Affordability is worse than ever. The real lesson here is that housing became an investment instead of a necessity. When the only path forward is ownership, and ownership becomes impossible, people cheat. The Brampton Loan isn't just a story about fraud. It's a story about broken systems. And until those systems change, this will happen again. Maybe not in Brampton. Maybe not with the same methods. But the same pressures will produce the same outcomes. Different city, different name, same fraud. If you want more deep dives into economic chaos, hit subscribe.